These Street sees huge gains amidst positive global cues. The Nifty rises above 25,500 to end at a near 9-month high. Nearly 40 Nifty stocks close higher, with financials and metals being top gainers and media, realty and IT being the top laggards.
State Bank of India has appointed 6 investment bankers to manage a planned 25,000 crore QIP that will help augment its capital base for growth. The move comes on the back of RBI's big liquidity push for credit.
There's a block deal rush with big trades seen in PB Fintech, Coforge, Delivery and One MobiKwik aggregating to over 1,700 crore rupees. The flurry comes ahead of the start of the Q1 earnings season. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key highlights of the trading day that was, and of course, and prepare you with all the key data points about the day that's coming up. I'm Surabhi Upadhyay, and with me on the show is Ekta Batra. And Ekta, what a session we've had today, right? The bulls came back in full marching force. Yesterday, I think they made their presence felt, but today they stamped their authority on the street.
Hi, Surabhi. Yes, absolutely. This is what it takes when, the geopolitical risk really recedes globally. But nonetheless, we saw the Nifty rising above 25,500. It was nearly a 9-month high for the markets today. Heavyweights such as Reliance as well as HDFC Bank were really the biggest Nifty contributors in today's trading session. And to put it into perspective, it was a large gap rally that we saw because the advance decline ratio was largely even keel. So it was not much contribution from the broader markets, but nearly 40 stocks closed higher today. Financials and metals really being the top gainers today.
Absolutely. I mean, a strong day, whichever way you look at it. And it seems that finally, the Nifty managed to shrug off all the uncertainty and all of the indecision that was a hallmark of the first half of the week. The second half is turning out to be very, very good. And if there's one niggling complaint that some people may have, it's the fact that the mid-cap index wasn't galloping along as much as the Nifty. I mean, relatively speaking, the mid-cap index was up about 0.5%, but the advance decline ratio was positive. And today's day was all about heavy-duty, large-cap buying. And we'll talk about that as we go forward. So let's quickly tell you what we've lined up on the show for you today. We'll start off with, of course, the key movers and shakers. And Vivek will give us a blow-by-blow account of all the green that we saw on the screen. Of course, we'll also talk about some of the key events to watch. We'll talk about some of the key stocks that were in play as well. But let's kick it off then with the day's trading action. Vivek, over to you.
Well, thank you so much for that. Like you mentioned, today a day that was led by the large caps, and the large caps are the one that did very well. Now, apart from the names that you mentioned, one section of the market that did quite well today was actually the NBFC names. All of the NBFC names, remember, there's a large IPO and there's a valuation rub-off effect that a lot of these players are enjoying. So look at names like Bajaj Fin, Shriram Fin, Aavas, all of these names doing very well in the session, all of them gaining over 2% each. One stock that we didn't discuss too much was FirstFry or Brainbeat Solution, up 17%, the top gainer as far as the NSE 500 was concerned, and one of the stocks that had significantly higher volumes today. The other set of stocks that did very well was the cement pack. Remember, they've been under pressure, but today the entire pack moved higher, led by the large cap names. Even a name like Dalmia Bharat, largest mid cap company, up almost 5%. Also have a look at some of the other names that did very well. Have a look at Cummins. Positive news flow coming in there. A new launch as far as the clean energy market is concerned. That particular stock higher by over 1.5%. On the other hand, very few stocks that did poorly in the session today, but largely profit booking was witnessed across the entire IT pack. Names like OFSS, TechM, LTI Mindtree, all of these stocks cooled off a little bit from the recent highs. One stock that had a significant rally, Endurance Technologies, today saw quite a bit of profit booking, almost 5% lower, and the entire realty pack that ran up in anticipation of the rate cut, post the rate cut, but today the entire pack did see some profit booking. Names like Soba, Prestige Brigade among the top laggards today.
Okay, Vivek, thanks very much for that. So that's a snapshot of all of the stocks that were in focus. We have our guests with us this evening, Ambrish Baliga, independent market expert, and Somil Mehta from Mirae Asset Sher Khan. Thanks, gentlemen, for joining in on the show. Well, Ambrish, let's start with you. It turned out to be a session where we've recaptured 25,500. What is your sense in terms of the momentum going forward? Do you think this will sustain?
See, technically, 25,200 was a major resistance, what we have seen for the last couple of weeks, if not months. And today, I think it has decisively broken out of that. And because of which we'll see the momentum continuing. Because again, the FOMO thing would come into the markets because there are a lot of people, especially on the HNI side, who had sold off in a big way during Operation Sindoor and post that during the geopolitical issues which we saw. I mean, recently the Iran-Israel issue. So, I mean, these people are sitting on cash, hoping that the markets will come down, which never happened. So, I think that FOMO effect will come into play, which I think could actually take the markets higher from I mean, from these levels. In fact, I'll not be surprised if we see levels of closer to about 26,000 over the next couple of days, if not a week or two.
Okay. All right. Got that. Amrish, today we saw pretty much an across-the-board kind of a move. It was everywhere, barring IT. I mean, large caps, everything else was up and about. So in this phase of the market, when we're barely like 2-3% away from all-time highs, in terms of placing fresh money, do you have a sectoral preference or is it going to be entirely bottom-up?
No, at this point of time, I will not really go in for too much of fresh investment because whatever I had to invest, I had invested much earlier, especially, I mean, when we were, in fact, sitting on 35-40% cash and we were expecting the markets to come closer to about 22,000 levels. That happened. We got completely invested. And during the geopolitical issues which we faced, we got into cash to the extent of about 10%, which I'll continue holding. I'll not really buy anything fresh at this point of time for investment. But from a trading perspective, yes, I think it makes sense to ride this rally, maybe closer to about 26,000 levels or closer to the earlier, I mean, all-time highs which we saw. I think at those levels, we could see some amount of profit booking coming. So from a trading perspective, at those levels, I would book some profits.
All right, so a little cautious from an investment standpoint. But speaking of trading, let's actually get to Saumil Mehta from Mirae Asset Sharekhan. Saumil, it's a turbocharged market all over again. So just tell us from what you see on the charts, the technicals, the positioning. What's the advice?
Good afternoon, everyone. Advice would be buy on declines. Absolutely buy at this levels as well. Targeting at least the all-time highs, maybe even above that very soon. But it's a clear breakout. The range which we have seen in the last 1.5 months, it has been broken out and taken support at 20 daily moving average every time it dips down. So that's a very good sign. High top, high bottom formations on the higher degree time frame. We are on the buy side on the momentum indicator. So great setup. Buy on decline should be the strategy. Nifty targets would be at least the all-time highs, that is 26,200, 26,300 levels.
Okay, all right. So that's a technical call on the markets. However, let's move forward now. There's a block deal rush with big trades seen in PB Fintech, Coforge Delivery and One MobiKwik, aggregating to over 1,700 crores. The flurry comes ahead of the start of the Q1 earnings season. Hormuz is here to tell us more. Hormuz, the momentum seems to be back.
Oh, yes. And how? The last 2 weeks, it's not just today's session, right? Today we did see significant amount of block deals, but over the last 2 weeks, we've already seen block deals with over 20,000 crore rupees. There's a rush from the promoters and institutional investors to cash in on what has been a very significant recovery in the markets from the lows that we saw in April. But take a look at some of these names, right? Vishal Mega Mart saw block deals worth over 10,000 crores. There were block deals in Dixon Technologies, there were block deals in Hindustan Zinc, Asian Paints. All of them saw majority of institutional investors or promoters cashing in as well. There are stocks like Ola Electric, Sai Life, Quick Heal, MobiKwik, Delivery. Interestingly, a lot of these names have seen block deals take place after their shareholder lock-in period ended, either last week or a couple of weeks earlier. And as of course, a major factor behind this rush of block deals returning is the recovery that we have seen in the markets. In today, we saw 4 names, as you just highlighted. Other than the fact that there are elevated valuations, there is strong demand, more importantly. Even Vishal Mega Mart, even after a 10,000 crore block deal, the stock has not moved an inch. So you see the kind of demand also that is there for the supply that's coming in. And of course, because of the closure of the trading window from the 1st of July, so just a couple of more days left, expect some more flurry to happen before this trading window shuts.
Okay. All right. Hormuz got it. So that explains all the hectic block action that we've had. Amrish, given all the blocks that Hormuz was describing and so many deals, right, last couple of weeks, Is there any one that kind of stands out for you? I don't know if you have a view, for instance, on PB Fintech, but any transactions or any stocks in those transactions that you found interesting?
Look, the stock which you talked about just now, PB Fintech, I think this is one space where I think there is still a decent amount of upside. And I surely will not look at any sort of a founder sale or a promoter sale across, a number of companies which I've seen in the past, couple of weeks. I would not see that as a negative. 10, 15 years back, yes, a promoter selling was taken negatively by the markets, but not anymore. Because clearly, they also need to take some money out. They also need to enjoy their wealth. And this is one of the ways of doing that, because unlike in the past when we have seen promoters siphoning out funds, I think that's come down to a large extent. So the only way they can encash the investment is to sell a bit of their investments. And the best part is it is all getting absorbed very well. Most of the buying is done by the funds, and it's not there in the market as such through retail. And as far as PB Fintech is concerned, looking at the low insurance penetration in India still, I think the upside is extremely good for insurance overall, and especially PB Fintech, because they are the platform. So any sort of a correction, I would look to buy into PB Fintech.
Okay, all right. So that's on PB Fintech. State Bank of India, that's the big story, has appointed 6 investment bankers to manage a planned 25,000 crore QIP that will help augment its capital base for growth. The move comes on the back of RBI's big liquidity push for credit. Ritu's here with more details on that. Ritu.
Well, that's right, Ekta. It's a mega 25,000 crore rupee proposed QIP, and therefore a lot of interest in this. And now 6 merchant bankers have been appointed by SBI for this QIP. Those include, we understand, high street bankers, your HSBC, Citi, Kotak, Morgan Stanley, ICICI Securities and SBI Capital Markets. And this, of course, comes after the SBI board had already approved this equity fundraising in a meeting last month. Now, while the board approval for the QIP is valid for 12 months, our sources in SBI indicate the timing of the QIP will really very much depend on the market conditions. Now, this is not exactly growth capital that SBI is looking for. We understand the primary objective of this fundraise is to augment the bank's capital base. Now, SBI's core equity capital, if you look at it, is among the lowest among its public sector banking peers, and the idea is to cushion that. Currently, their CET1 ratio is at 10.81% and the total capital adequacy is at 14.25%. And our sources indicate that the bank's internal target is to get the CET1 ratio to 12% and the total adequacy to 15% by March of 27, which is where the fundraise is going to help. Of course, we also have SBI getting nearly 9,000 crores from its stake sale in Yes Bank. And then there is the proposed NSE IPO, which if and when it happens will also help SBI with capital. Now, this 25,000 crore QIP, if it goes through, not only will it be one of the largest, QIP that we've seen in recent times, it will also be the first share sale by SBI in nearly 8 years.
Okay, it's a big deal indeed. And a lot of fundraising coming in from the big bank. Thank you for that, Ritu. That's State Bank of India, 797 on the stock right now. Actually, before we discuss fundamentals, let me go to Somil. Somil, on technicals, the whole market's moving higher. You spoke about momentum. Financials anyway are doing very well. How is SBI placed, and what would be the next levels you will track?
I think SBI has been negative today, but I think it's a very good setup at this point of time. A big triangle pattern has been forming just above the 200 daily exponential moving average. The momentum indicator has just given a buy signal, a fresh buy signal. The momentum indicators on the higher degree time frame are already on the buy side. So I think this big triangle will break on the upside. I would like to preempt that risk reward ratio is amazing. 779 would be the stop loss, which is the 200 daily moving average. And on the upside for positional trade, I think the next target would be at least 860.
Okay, all right. Well, Ambrish, what would your view be on State Bank of India?
Well, I'm positive on State Bank of India, and this is a very small fundraise which they're doing. I think just about 3% of the equity. So post this over the next month and a half, I'll not be surprised if we see levels of about 900.
Okay, all right. Well, let's now focus on another stock. Texmaco shares witnessed an uptick following the company's announcement of a 535 crore order win. Vinny's here to tell us more.
Hi. So yes, on the back of this order, when we saw the stock buzzing in trade, it was a 62.24 million or 535 crore international order which Texmac could received, and this was from Kamalco SA, which is a Cameroon-based company. Now, obviously, the order is for supplying 560 open-top wagons and providing 20-year maintenance for this as well. The deal also includes a potential expansion that they're going to go for, and that would be of around 1,040 more wagons as well. So a big order win on that front. 535 crores, that was keeping the stock abuzz today.
Okay, all right. Texmaco Rail having a good session, 3% on the higher side. Let's take quick final thoughts with our guests as well. Ambarish, today mid caps were relatively quieter compared to the large caps. But you've put your caution on the table already that you will not be rushing in to buy in the market. But on the mid-cap side, what would be, say, one or two stocks that could be on your radar? Defense, now those stocks are cooling down because the geopolitical headlines are receding, for instance.
Absolutely.
So would you look at that space?
Depends. I'll wait for some more correction before really buying into those. Whereas some of my earlier picks, like for example, Gland Pharma is one which I'll buy because in fact I have a target of about 2350, 2400 for that stock. Something like J Kumar Infra, where I still have an upside of about 15-18% from here. ABB, I think the sort of earnings which we have seen from this company, upside is about 7.5, 8,000 for this.
Okay, well, let's go on to a CNBC TV18 exclusive now. As per sources, the Insurance Regulator and Development Authority has discovered lapses in health claims of around 8 insurance companies it inspected. Yash is here to take us through the findings and what happens next. Yash, over to you.
So as you correctly pointed out, the insurance regulator, that is the IRDAI, conducted inspections in the first lot of about 8 insurance companies. 4 of these were standalone health insurance companies, and the balance 4 were multi-line insurance companies, having, of course, their health portfolio. What we've been given to understand from our sources is that lapses or irregularities were found with all these 8 insurance companies. But one important caveat here, what we've been given to understand from our sources, is that the degree of lapses, of course, was different for different insurers. For some, as I'm told, this was at a very ignorable level, but for others, it was serious as per the insurance regulator and the sources there. Which are these 8 companies which were inspected? These included Niva Bupa, Star Health, Care Health, and Manipal Cigna. Also, in terms of multi-line insurance companies, these included Tata AIG, ICICI Lombard, as well as HDFC Ergo. What we've been given to understand is that the regulator, looking at the violations which have come or irregularities which have come from the first 8 companies, has decided to expand its scope for inspection, going to all general and standalone health insurance companies. And once the investigation ends, the regulator could possibly look at either putting a penalty or even asking insurance companies to refund money to their policyholders where there were irregular claim settlements along with the interest attached to it.
Okay, all right, got it, Yash. Thanks very much for that. Well, on that note, we do have to take a very quick break. We'll thank both our guests for joining in, Somil as well as Ambarish, for being with us this afternoon. Well, as we take this break, let's leave you with some commentary that we picked up from Vikash Kumar Jain of CLSA. He believes that earnings downgrades are likely to continue and that the Indian market would perhaps be range-bound in the best case.
The problem is where expectations are today. Of the NSE 500 stocks where there is enough coverage, more than half of the stocks expect earnings growth to be over 20% CAGR over the next 2 years. More than half, at a time when nominal GDP growth may struggle to be even 10%. So that, to me, is possibly quite optimistic expectations. So from a bottom-up perspective, my worry is that earnings cut might very well continue. So what we are seeing is not really any big, strong news flow to drive a massive rally in the market. So we might be in a range-bound market like we've been for the last 12 months or so.
Welcome back. You're still tuned into Markets Forward. Now let's go across to some key corporate voices that we had through the day. The management of Sona BLW spoke to CNBC-TV18 about the former chairman Sanjay Kapoor's vision for the company, saying Kapoor had chalked 25 years plan for the company. Adds that hopefully the new chairman will have a same mindset akin to Kapoor. Goes on to add that the company grew 10x in the last decade and is quite optimistic about the company's future growth as well. The company has plans to add more product verticals. That's not all. The company is also keeping a close watch on the rare earth situation, as that the rare earth magnet crisis is real and will have an impact in the short term. However, indirect impact of rare earth crisis will be difficult to estimate at this point.
Next up on our radar is Keystone Realtors. The management says demand remains extremely strong. They add that the mid-market and aspirational segment are the largest growing for them. The focus is on premium and that remains a pretty high growth area for Keystone. The management maintains its guidance for launches at over 7,000 crore rupees for FY26. It is optimistic of even crossing this target.
All right, and next up is Senco. The jewelry retailer saw marginal stress in terms of footfalls and traction in the month of July. Further, management expects 20% value growth in Q1 of FY26. As this value growth continues, even as volume softens, further guides for a slight boost in the margin on the back of lower gold hedge.
Okay, and with that, it is time for us to sign off. But before we go, of course, we have to get you a wrap of all the key events to watch out for tomorrow. It's over to Upasana for that.
Well, let us look at the economic cues first. All India Index of Industrial Production will be out tomorrow. Now, moving to Europe, European Summit concludes tomorrow, which started today, so we'll be watching out for that. And even economic sentiment data will be out tomorrow. Coming to UK now, the Q1 GDP data will be out along with the current account data. US core PCE price index data on month-on-month basis will be out along with the consumer sentiment data. Now let us look at the key stocks in focus on the back of corporate action. Infibeam Avenues marks as the record day tomorrow for the right issue of its shares. HDFC Bank has also fixed 27th of June as the record date for its final dividend. And lastly, coming to the important board meeting, Hindustan Copper to consider fundraising up to 500 crore via NCDs or bonds on a private placement basis. This board meeting will be held tomorrow. And lastly, coming to the IPOs, HDB Financial Services and Sambhav Steel, both these IPO closes for subscription tomorrow. So all in all, looks like quite an eventful day.
Okay. All right. On that note, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side. Stay tuned.